Welcome back, traders. In the previous lecture, you have learned about the advanced entry method of swing trading strategy where we traded an uptrend market. And in this lecture today, I will show you the method to trade the swings in a downtrend market using those two special moving averages along with swing trading strategy. So let's start. As you can see, this is a 4-hour chart of pound versus US dollar, and the market is trending towards the upward direction, which you can see even with the moving average lines where the moving averages are also indicating the upward momentum. So as long as these moving averages stays below the chart price action, we can say that the market is still being running on a bullish momentum. Now as you can see, the top of this bullish candle is the current market high on this price action chart. Now from this stage, if a downtrend momentum forms by continuously making the lower highs and lower lows, then the current top on this chart will be considered as lower high level 1. So let's wait and see if the downtrend forms and then the moving averages changes their direction along with the price actions in this chart. And as I uncover some more price action, then you can see that price rise up for few more pips by riding with small and unhealthy bullish candles. And after then a strong bearish candle has appeared and engulfed the total retracement. So if the price falls down after the bearish candle, then that means the top of the retracement is an invalid top, because the retracement has been made by 4 very small and unhealthy bullish candles later on, which has been engulfed by the next bearish candle alone. That's why we can't consider the top as valid lower high or even higher high at any point. So let's just wait for more time to have a valid swing point. Now if I uncover some more price action, then you can see that price falls for more pips and break the previous bottom or higher low level on the current uptrend, and the bearish candle has closed below both of the moving average lines. And even both the moving averages has started to lower their position from upward to downward direction on this chart. So until now, you can see that price falls down and broke the previous bottom or higher low of the uptrend and as well as the moving average. So that's a sign that the uptrend may be going to have an end, since price could not make a new higher low level by staying above the previous higher low level, which is required to remain as an uptrend. Because as you know that every higher high must form above the previous higher high and every higher low must form above the previous higher low for the validity of an uptrend. Now if price rise up and then create a valid top by staying below the previous higher low level of the current uptrend, where we will find a strong bearish candle, then we can name this current bottom level as lower low level 1 and then the next peak as lower high level 2 by assuming that the downtrend is confirmed. So let's just wait for more time to see what will happen next. And as I uncover some more price action, then you can see that price rose up to a significant level to make a valid top. And if we can find a strong bearish candle at that top, then we can name this new top as lower high level 2. But for that, we need to have a strong bearish candle at this top level. And if we find a strong bearish candle at this top, then we can confirm that the downtrend has begun. We don't need to wait for the third lower high level in this case to trigger short trade entry, because a strong bearish candle at this top level means that price will fall after the bearish candle, which is why the price will not rise to break the previous top or higher high level of the current uptrend. So that would mean that the uptrend has failed to create a higher low level as well as a higher high level in this price action chart, since the current bottom has formed below the previous bottom and the current top has also formed below the previous top level. So that's the sign of the end of the uptrend momentum and the beginning of the downtrend momentum. But the main thing is we need a strong bearish candle at the top to confirm the downtrend, because from this stage price can rise up and break the higher high level and resume the uptrend again. So let's just wait for more time to have a strong bearish candle at this top level to confirm the downtrend. And as I uncover some more price action, then you can see that a strong bearish candle has appeared at the top, where the candle has closed by staying below the 30 exponential moving average line, which indicates that the buyers are so weak to pull up the price to continue the uptrend, which is why sellers took control of the market and the market is now ready to fall again. So that's the confirmation of the end of the uptrend and as well as the beginning of the new downtrend. So until now we have 2 lower highs and 1 lower low in this price action chart. We got the downtrend confirmation on lower high level 2 instead of lower low level 2, since we had a couple of invalid swing points on this chart which makes a valid swing point. This confirmation method is a part of the strategy for invalid swing points. You will learn that more in the next section. So now that we have the confirmation of a downtrend market and a strong bearish candle at the lower high level, So let's trigger short trade entry at the closing price of the bearish candle, which has closed by staying below the 30 exponential moving average line, and then set the stop loss at 3 pips above the high of the lower high level, and then set the profit target for at least 2 times the size of the stop loss. And as I uncover some more price action, then you can see that our profit target got hit as we had expected. There are so many strategies out there where they will teach you to trade at the moving average crossovers without the proper analyzing method of price actions on the chart. But that is wrong if you don't analyze the price actions of the market and depends on the indicators only. Indicators like moving average, stochastics, RSI or almost any other tools always runs behind the price action of the market, which is why almost all the indicators that you will see are called as lagging indicators. So indicators can't be the main factor to trigger a trade. Always look at the price action, try to analyze and read the market sentiment, and then make the trading decision regarding your analysis. Take help from the indicators only if you need to have an extra level of confirmation besides the price action. Look at this chart again. By the time the two moving average lines on this chart overlapped each other, the market already made its move. So by the time the traders who trade the moving average crossovers only, waiting for the next lower high level to trigger their first short trade entry on this newly formed downtrend market, we already entered in the market and booked a large number of profit by analyzing the price action of the market along with the moving average. So if you had waited for the moving averages to overlap each other and then trade short without analyzing the price action, then you could have missed the earlier trade opportunity here. So if you follow and trade the price actions using swing trading strategy, then there are more possibility that you will never miss a valid trade opportunity in any trendy market. Now if I uncover the rest of the price actions of this chart, then you will notice that we had so many short trade opportunities in this downtrend where all the lower high points has been formed below the moving average lines, which gives us the extra level of confirmation to place short trade entries. These moving average lines always worked as dynamic resistance here in this downtrend market. You can use this moving average setup along with swing trading strategy to have an extra level of trade confirmation on a price action chart. So practice this setup using previous market data and make yourself an expert in swing trading so that you can earn consistent profit from the market. So that's all for today. We'll see you in the next lecture. Until then, have a nice day and goodbye.